Stop for a second, because what just happened in the oil markets could change the direction of the entire global economy overnight. Reports are spreading that Iran has targeted a major oil hub connected to the UAE, and within minutes of the news breaking, something extraordinary happened in the financial markets. Silver prices jumped almost instantly, traders rushed to safe haven assets, oil volatility exploded, and investors around the world started asking one question: is this the beginning of a much bigger geopolitical shock that could send precious metals like silver skyrocketing? Right now, markets are extremely sensitive to geopolitical tension, and when something like this happens in the Middle East, the ripple effects travel across the entire global financial system within seconds. Oil routes, shipping lanes, energy supplies, inflation expectations, and investor psychology all become part of the same chain reaction. And today's reaction in silver markets may be a preview of what could happen next if tensions escalate further. To understand why silver reacted so quickly, we need to look at the deeper mechanics of the market. Whenever geopolitical instability hits oil-producing regions, investors immediately start moving money into assets considered safer during uncertainty. Gold and silver are historically the two metals that benefit the most during global stress events, but silver has a unique advantage because it is both a precious metal and an industrial metal. That means it reacts not only to fear, but also to expectations about economic changes. When the news about the attack started circulating, traders began pricing in several possibilities at once. First, they considered the potential disruption to oil supply chains. The UAE sits in one of the most strategically important energy corridors in the world. If an oil hub connected to the region becomes a target, markets immediately worry about shipping security in nearby routes and potential retaliation that could escalate tensions. Energy disruptions can trigger inflation spikes because oil is deeply connected to transportation, manufacturing, and global supply chains. And when investors expect inflation to rise, they often turn toward precious metals as a hedge. Silver, because of its smaller market size compared to gold, can sometimes react even more aggressively to sudden demand. Within minutes of the reports spreading across financial news networks and trading platforms, silver futures started moving higher. The jump wasn't just about the news itself, it was about what traders believe could happen next. Markets are always forward-looking. They price in possibilities before events fully unfold. This is why geopolitical shocks can create sudden spikes in metals markets. Investors begin preparing for worst-case scenarios. Hedge funds start adjusting their exposure. Algorithmic trading systems scan headlines and execute orders automatically. And retail investors watching the charts start rushing in as momentum builds. But here's where things become even more interesting. Some analysts believe that silver was already positioned for a breakout before this news even appeared. Over the past months, several factors have quietly been building pressure in the silver market. Industrial demand from solar energy production continues rising. Electric vehicle manufacturing requires increasing amounts of silver for electronic components, and global mining supply has struggled to keep up with long-term demand forecasts. So when a geopolitical shock suddenly appears, it can act like a spark landing on dry fuel. The price reaction we saw could be the market's early signal that investors are preparing for a larger move in precious metals if tensions remain elevated. At the same time, the oil market itself is extremely sensitive right now. Even rumors or unconfirmed reports can trigger large price swings because traders understand how fragile energy supply routes can be. The Middle East has always been one of the most strategically important regions for global oil production, and any military tension near energy infrastructure can send shockwaves through financial markets. If oil prices begin climbing sharply, that could push inflation expectations higher again. And if inflation fears return, silver historically tends to perform very well in that type of environment. But there's another layer to this story that many casual investors overlook. Silver is one of the smallest major commodity markets compared to oil or gold. Because of its relatively limited market size, even small shifts in global investment demand can create dramatic price moves. When large institutions begin allocating capital towards silver during periods of uncertainty, the price can accelerate much faster than people expect. That's why moments like this catch the attention of experienced traders. They understand that the first reaction in the market is often just the beginning of a much larger trend if the underlying conditions support it. And right now, several powerful forces are intersecting at the same time. Geopolitical tension is rising, energy markets are volatile, inflation concerns are still present in the global economy, and industrial demand for silver continues growing year after year. When multiple forces like these align together, the probability of significant price movement increases. By the way, if you're watching this and you want real-time updates about silver markets, global finance, and major economic events that could affect your investments, make sure you subscribe to the Light Finance channel and hit the like button. It helps the channel reach more viewers who want clear and simple explanations about what's really happening in the financial world. Now back to the situation unfolding in the markets. Traders are closely monitoring whether this event remains isolated or whether it leads to further escalation. The difference between a short-term price spike and a sustained rally in metals often depends on how long geopolitical uncertainty remains in the headlines. If tensions cool down quickly, markets might stabilize. But if more incidents occur, or if global powers begin reacting diplomatically or militarily, the financial reaction could grow much stronger. Another important factor is the behavior of institutional investors. Large funds managing billions of dollars constantly look for signals that indicate risk in global markets. When those signals appear, they sometimes move money into safe haven assets as a protective strategy. Silver can benefit significantly when that type of capital rotation begins. Some analysts also point out that silver has historically lagged behind gold during the early stages of financial uncertainty, but then accelerates later as momentum builds. This means that the initial spike we're seeing could potentially be the early stage of a larger move if market sentiment continues shifting. At the same time, retail investors are increasingly watching silver again. Social media discussions about precious metals have been rising. Financial YouTube channels are seeing renewed interest in commodities. And trading platforms report increasing searches related to silver price predictions. All of these factors contribute to the psychology of markets. When investors start believing that something big might happen, that belief alone can create the momentum that pushes prices higher. But, of course, markets are never one-directional. Volatility works both ways. Prices can spike rapidly during breaking news and then pull back if new information changes the narrative. That's why experienced investors always watch confirmation signals before assuming a long-term trend has started. Right now, analysts are monitoring several indicators closely. Oil price movement will be one of the biggest signals. If energy markets continue rising, inflation expectations could strengthen. Another signal will be how gold reacts in the coming days. If gold begins a sustained rally alongside silver, that often indicates a broader move into safe haven assets. Currency markets will also play a role. When global tensions rise, investors sometimes move into the US dollar as a defensive currency. But if inflation fears dominate the narrative, precious metals can outperform even while the dollar remains strong. This complex interaction between energy, currency, and metals markets is what makes global finance so dynamic. And events like today remind us just how quickly markets can change. One moment everything seems calm. The next moment, a geopolitical headline flashes across trading screens, and billions of dollars start moving across global markets within seconds. For silver investors, the key question now is whether this spike becomes a sustained trend or just a temporary reaction. If tensions in the region increase, the demand for safe haven assets could continue rising. But if the situation stabilizes quickly, the price surge might cool down just as fast as it started. This is why professional traders always look beyond the headline itself and analyze the broader environment. They ask questions like, is global inflation returning? Are central banks shifting policy? Is industrial demand strengthening? Are geopolitical risks increasing across multiple regions? When several of those answers point in the same direction, the probability of a major market trend becomes much higher. And right now, silver sits at the intersection of many powerful global forces: energy volatility, geopolitical uncertainty, industrial demand, and investor psychology. Each of these factors alone can influence the market. But when they all move together, the potential impact becomes far more dramatic. As we move forward, the next few days will be critical for understanding how serious this situation becomes. Markets will react not only to confirmed reports, but also to diplomatic responses, military positioning, and statements from major governments. Financial markets never operate in isolation from world events. They respond instantly to changes in risk, opportunity, and global stability. And that's exactly what we may be witnessing right now. So the big question investors are asking tonight is simple. Was this just a brief shock to the system, or the beginning of a larger geopolitical wave that could reshape energy markets and push silver into a powerful rally? No one can predict the future with certainty. But one thing is clear. When geopolitics and financial markets collide, the results can be explosive. Before this video ends, I'd like to hear your opinion. Do you think silver could surge if tensions in the Middle East continue rising? Or do you believe the market reaction will fade once the situation calms down? Drop your thoughts in the comments below. And if you found this breakdown helpful, share this video with someone who follows silver markets or global finance. And for more updates like this, stay connected with Light Finance, where we break down the biggest financial stories shaping the world.